Plunkett. I am the Deputy Executive Director of KY Innovation, which is also known as the Office of Entrepreneurship and Innovation, and we're located in the Cabinet for Economic Development. I just want to thank you guys for being here with us today. We're really excited to welcome back the Angel Investor Tax Credit and this program, and it's a lot more detailed than some of our other tax credits, and so I believe we are recording this so we can post it in case you missed something. But I just want to say thank you all for being here. And let's see, is there a slide for me? I was about to go over the...
Let me share that. I sure can.
All right. Just wanted to, before I just started doing it from memory, I figured we could pull up the slide. So at the Cabinet for Economic Development, we want to, grow our local economy, and KY Innovation is one of the ways that we do that, and specifically this tax credit program. So in KY Innovation, we have lots of programs, including entrepreneurial support programs. We're working on a new thing called the Kentucky Commercialization Ventures. And we have several tax credits. The small business tax credit webinar happened 2 weeks ago. So if you're interested in that, that one was also recorded and posted. And today we're gonna talk about the Angel Investment Tax Credit. And as I said just a second ago, we're really excited to welcome this back. Some of you may have utilized this in the past. It does have a few changes, but Christine McNeil and Marilyn are gonna cover those for us today and take us through the details. But I'm excited to be here with you, and if you guys need anything from me, don't hesitate to reach out.
Okay, Christine, can I talk for just a minute
Yeah.
here? Okay, this is Marilyn Laborvo, and Christine is going to cover the slides today. I'm going to do just a little bit of housekeeping. Ellie, thank you for our welcome there, and we're so delighted all our guests are with us today. Please enter any questions you have in the chat, and I will be following the chat. And if there's any of those that I can answer while during the presentation, I will do that. And then we have time for question and answer afterwards. Christine McNeil and I are the front door for the Kentucky Angel Investment Tax Credit Program. We review all the applications as they come in. So with that, I will turn it over to Christine, and thank you very much.
Thank you, Marilyn. I appreciate that. I'm Christine McNeil with KY Innovation. And this session today, we're focusing on the Angel Investment Tax Credit coming back online and what changes there are. There's a little bit about the program in the past. These are the numbers, some of the stats, investments that have been made into our small businesses, tax credits have been awarded, and our qualified investors in small businesses. This resets, has been reset for the next version of this program. So right now we have 0 qualified investors and 0 qualified small businesses. So this is just kind of a historic look of where we've come from, and we're going to talk about where we're headed. So just an overview for some of you guys I know are new to this and haven't participated in the program before. This is an expansion of our Kentucky Investment Fund Act. This program was specifically targeted to individual investors rather than fund groups investing. This program does have a $3 million annual cap for tax credits. And the small businesses have to be participating in qualified activities. These are knowledge-based activities, and you can see the 5 categories that those must be in. I do talk fast. I will try to slow down for this presentation. It's a lot of information going forward. But feel free to use the chat and ask questions as we go, and then we'll do some more questions at the end. So first of all, we're going to talk about the 3 different components of this program and how it works and what the changes are. The first one is the angel investors. Right, okay, so to be an angel investor, you have to be an accredited investor with SEC, right? So that's Regulation D. So that's kind of the first step. These tax credits, the carrot, the incentive to participate as an angel investor and utilize this tax credit is that angel investors can receive a tax credit up to 25% of their investment as a state income tax credit. That's what the program is designed for. and to help encourage our angel investors invest in our qualified small businesses. If that small business is located in an enhanced county, and you can see a map on this slide of where the enhanced counties are located, then that investment can be worth up to 40% of your investment as an income tax credit. Enhanced counties do change. They are not set in stone. So you want to make sure as you're logging in, as you're checking in each year, that those counties have not changed. But that's where they are as of right now for 2020-21. Right. Investors must make a minimum investment of $10,000 into that qualified small business. And we'll talk about our businesses next. Investors are allowed to receive an annual tax credit cap of $200,000. That's not the investment, that's the tax credit cap. Okay, so it depends on where your investments are located, what counties, and how much you're investing in. But the calendar year tax credit is $200,000. Then in January of the following year, that'll reset and we'll start over. Each tax credit awarded can be carried forward for up to 15 years. So if you have a tax strategy that you're working on for upcoming years, you do not have to take it all, or may not be able to take it all in the first few years anyway. So investors, this is a little bit of a different regulation that's been applied to this program and other programs across our incentives. So it's not just this incentive. Previously, investors cannot, obviously be employed with be a W-2 employee, own more than 20% of the company, or any related owners. So this has been expanded in some of these programs that we administer at the cabinet. And this includes closely related, also includes spouses, grandparents, nieces and nephews. It's a little bit broader than just immediate, parents, children, or owners. If you make an investment, if you're going to submit a tax credit application for a company and your investment will put you over that 20% owner equity, that's okay. Once that investment is made though, and you receive that tax credit, then it would prevent you from investing further into that company. All right, qualified small businesses. Have to be a Kentucky business. Hopefully that one's hopefully obvious, right? You have to have more than 50% of your assets, operations in Kentucky, and you have to have less than 100 employees. All right, your net worth is 10 million or less, or net income for each of the 2 previous years is 3 million or less. There is a possibility to graduate out of the program. And this would be if a small business has received enough investment from their qualified angel investors in this tax credit program, that all of their investors together combined have received more than $1 million in the Kentucky Angel Investment Tax Credit Program. Hopefully that makes sense. All right, so it's not about the investment into the small business, and it's not just one investor, but if a small business participant in this program has had multiple investors together for the life of the company, those investors together have received more than $1 million worth of tax credit, then that small business would graduate out of the program. All right. Small businesses must maintain their eligibility for 5 years after receiving an investment, and they will do this by submitting annual reports. All right. Our investors want to make sure those companies are doing that because they could potentially not be able to claim part of their angel investment in that 15-year carry forward. They may lose part of that if that small business does not maintain their eligibility and compliance for those 5 years. And it's not once you're qualified as a small business, it's once you receive the investment. So if you get qualified as a small business this year, but you don't receive an investment this year, maybe it's next year that you receive your investment through this program, then that 5-year clock will start ticking. Right. And like we said before, you got to be engaged in a qualifying activity. Right. Qualified investment. This is the third leg of this program. So we've talked about the investor, we've talked about the small business. Now we're going to talk about the investment, right, itself. And all three of these have separate applications. So once you have your investor, you have your small business, you guys have a deal, getting ready to make that deal, you have to have approval from our KEDFA board before the investment is made, before the control of that money is transferred, all right? We do this, KEDFA approves these applications every month at our KEDFA board meeting, except for at the end of the year. That probably won't be an issue with this program. The next two KEDFA board meetings that are coming up, January and February dates are on that slide, right? I cannot stress enough that the investment has to be approved before you can transfer control of the funds, all right? So once you get that letter of approval that you've been awarded, you know, that investment tax credit, you will get, usually within hours, but definitely the same day, you will get a letter or email notification that you're good to go, all right? You have to have that before the funds can be transferred. Again, $10,000 is the minimum investment that can be made. And this is new from the previously. Once you are awarded, once you get that letter notice from KEDFA that you have been awarded the tax credit, you have 80 days from that approval date to make your investment and provide the supporting documentation. Okay, that's different from the last time if you participated previously. So within 80 days, you make your investment and then you have to provide us documentation that the investment has been made, money's been transferred. So ideally, since that's an 80-day window, it's good to go ahead and have these deals ready. That's why we're doing this session now, taking questions now. You want that lined up pretty much before the first of the year rolls over. You can use a third-party escrow to have those funds ready. So you're just waiting for that KEDFA approval. It cannot be an escrow in the name of the company, right? It's got to be a third independent party. Right, once the small business has control of those funds, we consider that an investment, all right? The tax credit is transferable if you're not in Kentucky and you know, don't have an income state liability, then you are able to transfer those credits. That process is dealt with through the Department of Revenue. When you get your tax credit award letter, it'll tell you the instructions and who to contact with revenue and that process and what you need to do and what information you need for them. So application, like I said, there's 3 applications to this program. So the qualified investors have their own application. Your qualified small businesses have their own application. Both of those applications are open right now. They are online. You can submit those now. We highly encourage you to submit those now. Like I said, all previously approved investors and small businesses have to recertify. They have to reapply. Okay, there are 0 approved right now for investors and small businesses. You need to reapply, get recertified. That application fee is $25 for that per application. For that application, it's good for a calendar year. Right? You have to recertify annually, so you have to do that. Previously, you were certified basically indefinitely and just provided information, updated information. That's not the process anymore. So 2021, you'll have to submit another application to recertify, pay that $25 application fee just to keep it. This will help us keep our records and our investors and small businesses up to date. So that information that is public facing will hopefully be a lot more accurate. So I said, these are open. They opened October 1st. So those are online, and I'll show you that website on the next slide. The third part is the investment application. This is the actual investment. The investor turns this in, not the small business. The investor will submit this investment application with their plan to invest and their amount and the information required on that application. This investment application opens January 4th of 2021 at 9 a.m. Eastern. That's Frankfurt's time. So 9 a.m. Eastern time, January 4th, it's a Monday, first Monday of the month, you can submit investment applications. All right, do not submit them on Sunday the 3rd, because by the time we get hammered through all that email on January 4th, we'll email you back and let you know you submitted it out a window and you need to reapply. All right, we got to have that email timestamp in the right period of that open window. So the application fee for the investment application has also changed. So this is a bit new this year as well. So if you are applying for a angel tax credit up to $50,000, your application fee will be $500. If you're applying for a tax credit over $50,000, 50,000 or more, all right, then the application fee is $1,000. And you can pay that online as well. We highly encourage that, especially during COVID. If you can pay online, it'll be a lot faster and speed up the process, as we're not in the building as much or very often. Those applications, we have to have that payment with those to consider them complete and ready to go to KIDVA. So here are the websites. The Angel Tax Credit is on our CED's website. The guidelines are there. You can check out all the new rules and regulations for this program. All the applications are online now. The investment, if you've been looking at that previously, the investment application had not been there, but it is now. It is live. You can download the investment application as well. You just can't submit it yet. But please, please fill out your investor and your small business applications and get those submitted. Like Marilyn said earlier, it's the two of us, the front end for this program. And if you're submitting your investor application at the same time you're submitting your investment application, it's going to slow down that process, right? Because we have to qualify you as an investor or the small business you're investing in, right? Encourage them to get their applications in now. We have to approve you as qualified investors and small businesses before we can run your investment application. So we don't want to hold up the process in January, so please get those in now. This is also the website is where the applications are, the application fee can be paid online. It is updated for the new program regulations. And this is the email for the program. This is also the email you can submit your applications through, and then our number where you can contact us. Right, here's my information and Marilyn's information. So you can call us, you can email us, we take questions. I'm sure you'll have other information going forward. I'll leave this up for just a little bit and then I'll take the slide down.